Number 5 of the year. Cracking on with the CFTC report from Scotiabank, Euro longs have been adding in the current period and they increased their net positioning to over 25 billion, which is quite heavy. Euro USD still stalling, it hasn't reclaimed where it was over the highs in January, so still a bit of a unclear positioning. There was a lot of job warning from ECB that will intervene if prices rise, but there's not much I can do about the looks of it. GB was a bit more interesting. So GBP has been climbing all week, but positioning nearly halved on the long side. Actually, longs added, but net positioning dropped a bit as shorts added quite a bit. These shorts, I believe, are ahead of the Bank of England announcement coming this week. I'm thinking they could cut rates or indicate they will be cutting rates. So that's where the short positioning really came from. And the other commodity currencies, not a lot of change. NZD pretty stable. AUD wasn't usually any bullish or bearish territory to start with, and longs sort of cut back. But apart from that, not a lot to look at in terms of chart wise. Next week we have a lot of data for Australian dollar and also a couple of important announcements for the pound. I was crack on with looking at the AUD. In the light of the risk aversion recently that kind of spilled over from retail investors kind of jumping on certain assets and kind of rippling the hedge funds negative assets, so they had to like let loose of good positions to pay for the bad ones. That kind of created a bit of a chaos in the market. Last week and probably the week before, most price action in the financial space was dominated by options. So a lot of the tricks you usually see that used to work recently work very differently because of options volatility and the hedging that goes with it. So we're going to have a quick look at the volatility index, which is the VIX. It is a great way of figuring out where we are. So I'm inverting this just to show you something with regards to AUDUSD. They tend to move very closely with each other. So it is anticipated that the VIX continues to be elevated, or at least rises even a little bit more, which could drop AUDUSD, which takes me back to this chart which I wanted to show you in the beginning. So I believe, let me take this inverted back. I believe AUDUSD has got a little bit more downside in the coming week, specifically with China manufacturing. Now came a bit negative over the weekend. Feels like the manufacturing sector is sort of cooling off, peaking. That can't be positive for Australian dollar. So I like it to stay under this in the beginning of the week. If it could move up further, 77.30 would be my level to sell it from. There would be sort of the downside targets. We have a couple of catalysts, obviously the RBA statement, but there's a bigger movement coming on Friday with some monetary policy announcement and the retail side, which will be a little bit more important for Australian dollar, but sort of a downside expectation going to next week. For the pound, where we have the Bank of England announcement, there's on a price wise, market is actually not pricing in negative rates. A slight cut is expected beginning next year, but for this year there's nothing expected. So there's a lot of downside pressure for pound if Bank of England does not come good on the side of staying neutral to hawkish. If they hint a little bit of dovishness, if they look at data and say, look, things are not looking that good, pound could react sharply lower. So the beginning of the week, when we have some sort of asymmetric risk, you tend to see pound usually fall off in the beginning of Monday or Tuesday. If that happens, I would like to ideally trade GBPCAD. I want this zone to hold to explore a little bit lower levels. Nothing too dramatic, because that rise was mainly driven by pound being stronger because vaccination is doing well. However, given that the CFTC data added some short positions, given that we have asymmetric risk going into Bank of England, I'd like to catch a little short here from this level to possibly catch 73.80 levels ideally, and then we watch how things evolve. Ideally before the Bank of England announcement. Once the Bank of England announcement is out the road, we have a better idea of where we want to trade in new trade ideas could develop out of that. So we covered AUD, we covered GBP. Quick thing about the metals. So the metal sector saw a little bit of a dramatic moves here. So that's gold. You saw these moves going up and down. There was no real news behind it. Apparently, the Wall Street Bets Forum are betting on actually silver moving up, and gold is in sympathy moving up and down with it. So I'm quickly going to show you silver. The bet is that silver could reach levels extremely high, 30 and then eventually 50, eventually 100. In reality, the mechanic of doing that in a market this big is near, in my opinion, near to impossible. So you might find, okay, these highs might get taken, you could move into 30 possibly, but on a sustained basis, hitting really higher levels is, in my opinion, near to impossible. In the near term, what you really want to see, you want to see these levels hold about 2660, worst case 2640. You want that sort of level to hold to be able to establish a sort of long, if you want to take advantage of that trade. But as a whole, the whole idea and the whole bet is a little bit far-fetched. So we cover commodities, we cover that. Quick look at USDJPY, because yen pairs are mostly moving up, and that's actually in line with what US 10-year yields are doing. So US 10-year yields last week had a dip, and then after the Fed announcement had a bit of a bounce. What we're looking further is for this bounce to keep hold and climb further above 1.1 and possibly reach 1.2, which would be very good for shorting yen against any other currencies. I like to have a look at USDJPY now, because USD is currently a bit stronger. If that establishes, if you see that range breakout, really expect 1.552 to get touched even early in the next week. Next thing I like to have a look at, the last thing, is the oil market. Very important zone where we're at. We're in sort of this consolidation for quite some time, and it's going to have a big impact on other currencies depending which way they break. If oil tends to break down, we have the sort of rejection, and clears that sort of zone it created, that sharp rally. You will find the Euro USD will come back down with it, as inflation expectation will drop with oil. Should at any point it actually break higher into 55 levels, then that is great. The Euro USD should take out the yearly highs and continue higher. Same thing with GBPUSD. At the time being, it's a bit more tricky to tell which way this will break out. It is quite lofty at these prices, and just a little bit about $50 seems to be like the profit margin for fracking drillers in the United States. So if this starts to move up higher, you'll find that supply hits market again, and this could rapidly actually come down. In my opinion, the way OPEC operates, I think they will try to keep this price around stable, or even maybe let it drop a little bit further, but around these levels. There has been a couple of travel restrictions now with the new COVID strand picking up, so you would imagine oil to come down a little bit. On the contrary, we had a lot of heavy draws from the EIA report, so a bit of a push and pulls. That explains why we're in this contested area for majority of January. Again, a breakout will cause a good tradable momentous moves in the other assets, being that the Euro USD and the other assets haven't really moved far away, is really because oil is still stuck. So we've got a couple of things to look at. Possibly like to sell GBPCAD before the announcement. AUD is a bit on the back foot beginning of the week, and then once we move into Thursday and Friday, we'll be able to have a couple of new setups around with GBP, specifically where GBUSD will be moving, because it's kind of stuck. It really captured some good levels where everybody was thinking, okay, if it stays above here, 140, 141 is on the cards, but it really hasn't generated that momentum we are looking for. So it's some area to really keep an eye on. That would be all from me. Thank you.